Welcome to TradeTheNBI.com. This is John's reports for the 22nd of November and heading into the holiday week of Thanksgiving, so it's going to be interesting. Could see some increased volatility with that, or just a benign, given what the readings suggest here. We have the DOC showing sure positive with rising DOC green, which is midterm buyers, as well as almost no shorts and short-term buyers also in the rise. Oddly, though, we ended up with the NBI magenta dipping below the 33 level, as well as below yellow, and white crossing above red. White crossing above red at this level, not quite having the same momentum from a downside draw, but nonetheless has to be respected. So we get a little bit of divergence between the two with regard to that, which is interesting, coming at higher highs on lower shakeout. So if we get a soft Monday, that's going to be higher highs and dropping shakeout. Could be problematic. I mean, still a move back towards the ABM yellow, which those values up right there. 63 is the ABM value, so it's a significant move of 30 points lower than we're at right now, and that's just because we've been pushing the edge. So got a lot to play out within that scenario. You don't have the same situation on the NASDAQ, so again, this is that divergence between the markets, but you do have an extreme move of the DOC green here, spiking. Last time it spiked above the 13.5 area like that. We saw a bit more of a significant pullback within the move. So those kind of dynamics are part of that rotation, as well as moving into a holiday experience here. From a YM standpoint, Dow futures still weak. Probably not going to improve because that's completely negative. So you're just seeing that certain areas are struggling within this. A little teeny pullback in gold, that's softness when it broke below the other day and then continued on Friday as well. But again, with that OPEX, there was just a lot of pressure to put everything right around that 4,700 without giving either side a victory, which just let all that premium expire worthless, which is exactly what the big players want. Sort of like being in Vegas, nobody beats the spread and everybody's happy, at least the bank. From a euro standpoint, forget the euro, it's disaster mode. The fact that it's even held up this well is pretty good. A lot of people are saying that it's too oversold, should get a bounce. We had the dip of orange in that, but without move below the red, wouldn't expect a whole lot of movement for improvement until we see a reset of steel and or dip of orange. I have to mention that shakeout is still ugly, so it's going to be days more before that moves out. Maybe the soft week will help it, but all the news out of Europe is just horrible. Not only are you having the spike in all these places that have heavy vaccination, but you're also seeing these growing protests throughout, whether in Italy, they were in Austria, they were in Britain, all over Germany. You name it, people just not happy with the approaches that the governments are taking because they've been ineffective before, and doing the same thing over again and expecting a different result, foolishness. And of course, interest rates giving back some of those gains, suggesting that the belief is that the Fed is still going to keep throwing more liquidity at things and still keeping rates in the zero range, and the market's really not fighting them at all at this particular stage on that. And from an oil standpoint, that softens the blow as more we see oil declining from that white spike. Moved 50% from this is the first target range there, and then we will check to see if we get a continuation to see whether the zero is viable. That would be a significant improvement because it would take that entire push that's been up and remove it. That would take a lot of inflationary pressure off. It's not going to stop it, but it would certainly slow things down. I've spent some time doing the optimization from a performance standpoint for the Bitcoin futures using the Opus 2T. Big improvement, but just making a few of those adjustments within each of the categories. 2.28 profit factor and a 2.0 on the short side. And basically it's a flip of the coin. So it's basically saying, okay, you flip a coin, but every time I do, when it comes to average winning trades, I'm going to get more than double my loss. So yeah, you're always going to win in that scenario, and the performance graph reflects it quite nicely. So let me go ahead and give you what those stats are. The easy way to do it is go to Studies and edit Strategy, and I will just whip through what the settings are that give those results. So as you can see, we have each of the different segments, and then usually where the ones are the beginnings of a new trade setup, and then you have all the variables that fit within that. And then each time you end up with the new setup, the different readings accordingly. And these were just primary setups that I did, so they certainly could be improved even further. And certainly I know the short side setups that I have, I want to do some additional carry through on them. And there's always a good discussion as to whether or not it's better to take some of these when dealing with a time chart like that as set profit targets and then move on to the trend ones, because the Opus 2T is really pretty much set for capturing both long and short term trend setups as opposed to just taking quicker hits and rebooting. So it's just a slightly different approach than a couple of the other ones. And there you have pretty much, you can pause through and make sure that your readings match all of those, and you'll be all set. It's clean and easy. But it is worth noting, I mean, we captured from the peak move this entire short setup. We had a bit of a turnaround move, and still within weakness though, going into its open. And right at our previous algo level, just like this over, so you can see at 57. The next one isn't down until you get to 51, but if you look at it from a daily standpoint, a little bit higher up. The 55 was that 50%, 54.96. So the low 55.600. So right around the 50% caught a lot of interest, and exactly as we expected it would. Even have turned on my ETH Ether with the in dollar translation. But it also captured decline and turnaround move, flipping back into the green setup right there. So always worth looking at that from a 50K standpoint. We got caught in a couple of unfortunate ones where we ended up with the long and just enough dip to trigger the turnout, but then it moved right back, only to do the exact same thing and do it again. So just some unfortunate. We were up decent on all of those trades from 94, and here's what the market did though, exactly what I expected when I talked about it on the video, that usually that breakout from the 4700 would take you right around to the 4723, usually 2023, and if it breaks past that, it goes to 38. Convenient that those are 23, 38 like Fibonacci numbers, but needless to say though, right before the open, dipped it right back to it and literally clung to that 47 dip up and down. And from an intraday chart, you can see, scroll back just a little bit because it doesn't fit into one chart, which meant there was a bit more volume. So you can see this was that pre-market, and then right in that pre-market filled back in positive extremes that existed. And then we just kind of bounced back and forth around that 47, coming all the way down to the 91 periodically, and we just kept marking those. But beautiful cases when you get these red spikes, particularly over 40, and the rollover, and literally I just look for the crossover where in this case magenta, just even though it's still above the 33, which a lot of times we want to wait for, but when you're talking about a move that stalls out right at that 50%, I'm usually just looking for once it breaks down from a red standpoint below there, I'm usually starting to attack it, and it can take a few more bars and actually can still fractionally move higher, but once the white broke above at this particular point, then you got the zero target because you're below 50% white leading, and that became very nice from a numeric standpoint because you're looking at 47 down to 91, so you're looking at 10 10-point range, which is beautiful, and it did exactly that. And then started to gain a little bit, but we can see leading with white NBI. Could still spike a little bit as futures open up, but if the white continues to lead that, I would expect that we will come back and revisit that 90 range. It'll be interesting because you always get the B players wanting to prove stuff during the holiday period, and that can create some extra volatility as they play around with the lighter pressures against them. So you get a little bit more swings. I mean, it still evens out in the end, but not expecting any major directional change simply because holidays coming. It's more or less if something breaks newsworthy that would justify a change in free, easy money, which just continues to drive the market higher. And it's going to continue to do that until there's an impetus to move your money elsewhere. And at this particular point, you've got other countries all wanting to move their money into the U.S. because their all currencies are devaluing, therefore buying up dollars, which means to move into dollar-related investments. And certainly, treasuries aren't giving you a yield. So at that particular stage, you've got equities, and that's it. That's the game. As always, though, I'll keep you updated on anything happening. I have an update working on the adjustment with the PNT2 for some of the Magenta docs that I've been expanding, and I'm hoping I'll have that in a few more days. As always, though, trade well. Look for me on the Skype chat. We'll talk to you later.